Welcome, everyone. And I'm so excited to have Alejandro back. And he's going to go through a company that both Alejandro and I shop at, Costco. And we're going to talk about Costco's business model and its competitors. And I'm super excited to talk about Costco because it's also one of Charlie Munger's favorites. So, with that, Alejandro, thank you again for being on. And let's talk about Costco.
Hello, Michelle. Hello, everybody. Again, thanks for having me here. As you said, it's really exciting to talk about Costco because we are both customers of Costco. And as you said, Charlie Munger is a big fan. So it gets you interested in trying to understand everything about it. So let's start with it. So a little overview. They are a membership warehouse, which means to get in every one of their stores, you need a card in which you have to pay a fee yearly. There's two types of memberships, one that costs $120, which is the premium one, which brings you cashback and other deals, and the other one costs $60 in this moment. They have 838 stores. They've been growing pretty fast, but always trying to grow with their own cash flow. They don't like to get into much debt. We're going to talk a little about their debt later on. They offer a limited selection of nationally branded and private labels. Kirkland has become one of their big income sources. Is around 25% of their sales. It's a brand that everybody that knows it resembles quality with it. So it's a very trusted brand. It has taken a lot of share from other well-known brands. The average warehouse is 146,000 square feet. It's a little bigger, for example, than Sam's Club, which is around 140,000. And the warehouse is open around 70 hours a week, which is around 30% less than, for example, Walmart. They are very efficient with every movement they do. That way they pass that to their customers.
And quick question, are the 838 stores in both Canada and the US, or also do they have stores in other countries also?
They do have stores in other countries. Later on, I'm going to show you guys a graph where it shows like the division of the stores, but the other countries are like more others. It doesn't really specify in the graph I'm showing, but they are in more places than just Canada and the US.
Okay.
So some characteristics of their business model: they purchase in volume, obviously like really big trucks. They reduce handling of the merchandise, which obviously passes that to the customer. So instead of stocking everything in shelf, they just put it in racks, as the last word says. They have a higher turnover of merchandise, and they sell first, then pay their suppliers, which is amazing for their cash flow. They don't have to get into debt to have inventory, so they just pay whenever they sell and sometimes later on. So their cash flow is great. And as I said before, merchandise generally stored on racks. So here to me is the secret sauce of Costco. So the membership renewal rate is above 90%. So more than 9 out of every 10 customers basically renew their membership, and they are growing at around 6% members per year. As we can see, they have around 66 million members as of 2022. And why I say this is the secret sauce, because they have a really predictable revenue. They know people are going to come to shop at their stores. So every time they open, they have the confidence that they're going to keep growing that vicious cycle, like helping their customers, helping the employees, and everybody wins. Here's a little sales per category. So foods and sundries is around 1/3. Non-foods is on 61%. Warehouse and ancillary is like 1/5. A lot of people like me, not sure if you do, Michelle, but go there to shop for gas, which is way cheaper than other brands. In my case, I always see like another gas station before getting to Costco, and it's usually like 20 to 15 cents less, which obviously, I mean, it makes you go there.
Yeah, for sure. I go there and usually you're right. Costco is usually cheaper than others. And the great thing is that I heard that it's actually using sort of name brand gasoline sources. Like I think some of the Costcos might use Chevron and there's other, high quality gas. So even though we're getting a great discount, they're not sacrificing the quality. So that's an amazing thing too. And yeah, I always like checking up on Costco's gas and using apps like Gas Buddy to see what it is before I go there.
And complementing with what you just said, I mean, the Kirkland brand, there's a myth that a lot of the well-known brands are the ones who manufacture for them. So there's a lot of well-known brands that don't want to say that they are Kirkland, but they are. So yeah, I mean, there's the myth, which is a reality because their Kirkland brand is a great brand. I mean, I just love it, honestly. So here is what I was saying before. So in the United States, they have 160 billion in revenue. Canada has 32 billion, and other international markets have around 30 billion. As we can see here, which is really interesting, the most profitable market is Canada. Is if you see the property employed on Canada, like tangible assets, is around 2.5 billion. And with that, they are getting 1.3 billion in operating income, which makes it the most profitable market. The States is not bad at all, but it's a little less. And the other countries, definitely, as we see, I mean, they are employing the double of tangible assets that they employ in Canada, and they are getting less operating income. So I guess this is something they are really looking into it because obviously they want to grow, but obviously improving margins. Right here we see the net sales, and as we see, it just grows so fast. But something super interesting to me here, and this is how, if somebody asks me to define Costco, is that basically they sell 200 billion, and on that they make around 10%. So let's say 20 billion. And with that 20 billion, they pay everything. So basically their money is made on their membership fees. If we see, I mean, they got 4.2 billion in membership fees on 2022, and their net income is 5.8 billion. So basically they're making everything on their membership fees. So that's why they take so good care of their customers, because that's where they're basically making their money. Right here we see the balance sheet. The merchandise and inventory is basically financed by their suppliers. So when they open a Costco, basically they are not having to spend any money on what they have there, because it's, as we said before, financed by the suppliers, bringing a great cash flow, and it's way less money to open a store, because let's say that instead of the supplier's financing, when you open a store, you will have to purchase of that merchandise. It will be way higher and way less profitable. So right here comes the interesting part that we're going to do today, is compare it to the other big guys. Sam's Club, which many of you know is owned by Walmart. They almost have the same amount of members, but as we see in sales, they do almost 1/3 of what Costco does with almost the same amount of members. Costco does have more stores, almost, 235 more, but they're doing 3 times the amount of sales, and their stores are almost the same size. So as we see in the last line, return on capital per store, for Sam's Club having almost similar characteristics is 11% less than what Costco has. Now let's go to BJ's. I mean, they have 226 stores, and they do just 16 billion, which if you see the return on capital is very high. So would that mean that it's a better investment than Costco? Honestly, you have to do your due diligence, as they say, but one particular thing between BJ's is that they don't own any of their stores. In the other side, Sam's and Costco own their stores. That is why the capex per store for Sam's Club is 24 billion, and for Costco is 28.7 billion, and for BJ's is just 4.5. Obviously, comes the risk that the owner of the store raises the rent, maybe sells the place whenever the contract is expired, and they will have to get out of there. So there's a lot of risk. In the other side, Costco owns their stores, which is a big advantage. The membership fee, millions, as we see, Costco having almost the same amount of customers have way more profit in here, because first of all, they have a higher premium price, which is right now at Sam's is like 110, if I'm not mistaken. But most of their customers at Costco are premium customers. In the other side, most of Sam's Clubs are just they get the cheap version. I mean, not the cheap version, but yeah, the $50 membership, which obviously doesn't bring as many benefits. So as we see here, Costco is so much more profitable. The moat, I think, for Costco is so much bigger because, as Michelle and me experience, every time you go there, it's just like a treasure hunt. You are happy. I mean, they pay their associates more, which makes them many times be more friendly and just gets the vicious circle going. Like friendly people, happier customers, they are more efficient because they stay more with the company, so they are probably able to stock faster. So it's just this visual cycle that is super interesting, built by Costco. Obviously, they're free samples, the $1.5 hot dog with Coke, which I think Sam's also has it, but I don't know, just Costco to me is very special. It's hard to describe that emotion, but I mean, I really love the brand.
Yeah, and also people, in addition to that $1.50 hot dog and soda, people love the $5 rotisserie chicken. That it's you would think it's defying inflation because they should have way more costs with making the chickens available, but they still find a way to keep costs down and give that, because by spreading that goodwill, like you're saying, it makes the customers happy and they keep coming back because they know, you get your shopping done and you buy in bulk and then you get to enjoy some food. So it's kind of a win-win for a lot of people. And I think maybe that's also part of the charm at Costco. And I don't know if Sam's Club and BJ's offers anything like that. I've never been to those stores, but yeah, it makes me wonder. And yeah, like, so it seems like Sam's and BJ's have a lot to live up to if they want to try to copy what Costco is laying down as the gold standard, let's say. And I mean, BJ's does seem compelling. Like, even though, yeah, there's the risk that their warehouses could be, kind of closed down if the real estate owner were to say, we no longer want your business here. But I feel like once they've built it, it's probably like more difficult to leave it unless they don't really have customers coming. So unless they picked a bad location, and then they might need to shut down. But if they might keep a good location, that might be an interesting business model to see how much can they grow and how much can they take away from either Sam's Club or Costco, since they still only have a fourth of the stores that Costco has. So there's potentially more room, but then there could also be market saturation if there's just too many warehouse clubs. Like, you don't need you're not going to put a BJ's right next to a Costco, right? So like in some ways, BJ's has more of a challenge that they need to find somewhere that they can be, that they can still grow in a way, because it does seem attractive, that 40% return per store. That's very impressive.
Yeah, I totally agree with everything you said. I mean, and their capex per store is so much cheaper to build. Like, I mean, they just spend less than 5 billion, but obviously their return per store is less than Costco, but still percentage wise is bigger. So yeah, you're right. I mean, it is an very interesting business to study a little more. I always put what Buffett would like about it. Obviously, recurring revenue, companies growing, the moat, as we said, the vicious cycle, happy employees, happy customers, bigger, happy suppliers because they get to sell bigger quantities, a huge brand, especially with Kirkland. I mean, they just keep growing that Kirkland brand. Charlie loves it. And there's a very funny story about Charlie and Warren on this. And Warren told it at one of the annual meetings, and it was supposedly it was Charlie and Warren on an airplane, and they were hijacked, and the hijacker was like, "So I'm gonna have to shoot you, but I want to give you a last wish." So the guy asks Charlie, "What is your last wish?" And he said, "Well, I want to tell for the last time all the virtues about Costco," because he always talks Costco. And then they asked Warren, "So what is your last wish before I shoot you? Shoot me first, please." Because he's tired of listening to Charlie every time just talk about the virtues of Costco. But obviously, I mean, that brings confidence of how good of a company he is. Again, a very profitable growth. And I think he doesn't like the current price because still, I mean, it's an amazing company, but it is almost 40 times earnings, which is very big. So that's what Warren will not like about Costco. I mean,
So
they
when you
sold.
say, sorry, when you said he probably sold, are you referring to Buffett or Munger? Who
No,
sold?
no, Buffett. I mean, remember he sold few years ago, like
Oh, he
1 year
did.
ago. Yeah, they
Oh,
did.
okay. All right, good to know. Yeah, I wasn't sure because I don't know if Charlie Munger, maybe the Munger family still owns it because their cost basis was so low that they don't need to sell it, right? But are you talking about Berkshire Hathaway's portfolio got rid of Costco?
Yeah, it was. Yeah, it's totally Berkshire. Yeah, Charlie hasn't sold a share. No,
Hmm.
they. I mean, they own Berkshire, they own Costco, and they don't
Yeah.
sell that, and a bunch of apartment houses.
Yeah, although it's interesting, you would think if Berkshire thinks it's also a great business, similar to Coca-Cola and American Express, why should they sell a winner? And Costco is still a winner. Maybe they, kind of made a slight mistake in selling it because even if it runs up a lot, but you're not losing anything if you got it at a low cost basis. So it's surprising that Buffett sold it.
Yeah, I totally agree, and Charlie probably agrees with us because it was his decision.
Wow. So
They-
yeah, maybe it like you said, I think Charlie Munger at a Daily Journal meeting maybe the year before or either in 2021 or 2022. I think Charlie said, Costco is a great business because of the high quality of goods and low prices. Like they have a price moat, like they are the lowest cost producer, and that's part of their moat. But yet he said that he wouldn't buy it at these prices. But if you are an institution like a pension fund, it's okay to own Costco because you'll own it for the next 50 years. But for most people, even the Munger family, maybe he wouldn't suggest buying it right now until it becomes a more reasonable, multiple, like more, the if some people were to sell it, in the next stock market panic, maybe that's when there's a good buying opportunity.
True. That is. And lastly, my lessons. I mean, any business that you have, it's just really good to try to build a membership base. grow profitably. You don't, if you have a good business, you're not in a hurry going into debt. In most businesses, obviously, if you find a way, pay your employees above average. And I say if you find a way, because not every business is able to do this, but Costco did find a way, and that's why a lot of people, especially in the retail industry, want to work there, so they get the best people, and the best people usually gets the best service. So it's this vicious cycle again. Get your customers excited. They do get me excited. I mean, I just, like I said, I mean, sometimes I just go there for a hot dog. I go do a quick walk around, see what I find, and I don't know. A lot of times I'm just planning to spend 150, and I finish spending $100, $200 because they just get this surprise, this, I don't know, this great toothbrush that is probably 40-50% less than other places, which you have to take advantage of that, because next week it might not be there. So you just live excited, and then you tell the story to someone else, and again, the vicious cycle. It's just, and Bezos took many ideas to build Amazon from Costco. I mean, he talks a lot that he had a lot of reunions with Jim Sinegal, and he learned a lot from him. Prime of Amazon was built basically copying Costco. So I think that's a good subject for another video, but obviously it takes a long time to discuss that. So
Yeah, and it makes sense that, they're both retail businesses, and like in many ways, Amazon is also trying to live up to Costco, because I think Charlie Munger also kind of he slightly made fun of Amazon in that he still prefers Costco, not Amazon. So it's kind of funny that even though Jeff Bezos is trying to make it as good or better than Costco, in Charlie Munger's mind, like almost nothing is as good as Costco, maybe, like, and maybe another one, which is another similar company to e-commerce, is Alibaba. So I think part of why Charlie Munger might have also bought Alibaba was because they also have this membership model, but instead of consumers, it's for businesses that want to have the ability to sell on the platform. So I wonder if Amazon also collects membership fees from the sellers, or if they just take a commission. I'm not too familiar on the business model, but like you said, another topic for another day maybe. And also the other thing that I learned, like you said, is they paid their employees above average. Like I hear that they have one of the best paying retail jobs you could get. So it makes sense that they have happy employees and customers. And then also I hear that their margins are pretty low, like only 11%, which is pretty small, I think. Like I don't think they keep much margin. So I don't know if you've also come across that statistic. Do you think that sounds right?
no, that is right. Exactly what you said. I mean, it is about 11%, and with that 11%, they just pay, and they most of their money just through their memberships.
Yeah. So I mean, it's amazing how, they keep the business pretty lean, and it works. Like, they're, even though they've had to raise some prices, there were some things at Costco that I'm like, oh, it used to be so much less, but I guess, some of the brands, they have to raise their prices a little bit to, cover their costs of making the goods. So, even though some things went up in price a lot, but there were still some good deals that they didn't inflate too much during the pandemic. So, you kind of have to weigh, which bulk items are more worth it than others, and see what, works well for you. But yeah, we're not necessarily trying to convince people to buy more into Costco or whatever. This is just, for entertainment and educational purposes that we are discussing this Costco business. But I definitely wish that I could buy the stock when it becomes more on sale, like becomes, less bid up in the market. So it's amazing. Like, and also Costco is a recession-proof company. So no matter what happens, like especially during the pandemic, people were snaking outside of the Costco and in so many lines of carts all over the parking lot, and just waiting to get in because they really love Costco that much. So it just goes to show that no matter what happens in the economy, Costco will still be thriving.
Totally agree with you what you said, Michelle.
Well, thank you so much, Alejandro, for sharing all of these lessons and the analysis of Costco's business model. And yeah, we'll have to keep tabs on it. And I think, like you said, unlike when we talked about Domino's, Costco doesn't have much debt on it, right?
No, they just have around 6 billion, which is nothing compared to what they're worth and what they produce. I mean, going back to Domino's, they had almost 5 billion, if I remember. Yeah, I think it was 5 billion, but they just make $500 million a year.
Mm-hmm.
Here we have around 6 billion, but they make about that. So basically,
Yeah.
they could pay their own debt if they wanted to.
Yeah, within a
Yeah.
year. So unlike Domino's, which would take 10 years to pay it off, Costco can pay it within a year. So that's a much better business in that way of keeping the debt low. So I think that's a really great business role model also.
Yeah, totally agree. And their interest rate is so low. I think I don't remember quite exactly, but I think it's around like 2.5% or something like that. Crazy.
Oh wow, that's amazing.
Yeah.
That's like some of the mortgages in 2020 that were
Yeah,
so cheap. But
absolutely.
also, quick question. Do you think Costco has a lot of room to grow more internationally or in the US? Like, how much more of a growth rate do you think they can maintain in terms of more stores or revenue growth?
I think they can grow around like I think they have quite a bit to go, but I mean they've been growing around as we saw like four between 4 and 3% in stores per year. So I think they do have a room to grow. And internationally, they definitely do, but as we saw in the graph, it is a little less profitable. So I am not sure if they are interested in that or maybe just, I don't know, maybe start rebuying a lot of the shares, which if we see the income statement, they haven't done. I mean, they keep just reinvesting in their business, just opening new stores. So I'm not sure what are their plans, honestly.
Hmm.
But in Canada, I think they do have space to grow and they are very profitable there.
Hmm.
So I think that is definitely a company worth looking and just a lot of learnings to get out of it, in
Yeah,
my
well, that's
opinion.
great. Yeah, hopefully they keep expanding in Canada and maybe I don't know if they're in Mexico, but maybe by expanding more in North America overall, maybe that would be much better opportunity because it's kind of closer to home.
Totally. Yeah, I totally agree. It's probably cheaper to send everything. So,
Oh yeah, that'd be great. Well, thank you
yeah,
so much, Alejandro. This was wonderful and it gives us some things more to study and it's great, learning why maybe Charlie and Warren like this company a lot and maybe Berkshire will buy it again someday if it becomes cheap enough. So we'll see and I hope you have a great rest of your day.
thank you, Michelle. It was
Bye-bye.
great being here.
Thank you.